It's really coming down to the wire for a deal in Europe for about the 25th consecutive time. So my expectations are low, but let's talk. We have Patrick Legland, Global Head of Research at Societe Generale, and Lee Munson, Chief Investment Officer at Portfolio, and he's the proud author of the brand new book, Rigged Money. Rigged money. I might find out what that is. Patrick, let me go to you first. Okay, you live over there. Do you have any expectations that these triple bazookas are going to be put into place and we should all run out and buy stocks?
You know, you are right. In the last 2 years, every week has been a key week for Europe, unfortunately.
Right.
There are big risks that market will be disappointed on December 9th. The market is expecting two things. First, that ECB will monetize. They will not at this stage. It's far, far, far too early.
No bond buying.
But I don't think so, unfortunately. I don't think so. And the second thing, the market expects as well a new governance to be put in place for Europe. It's far too early as well. And obviously, certainly, they will come with some ammunition, with some things, but not enough to bring enough confidence in the market.
All right. Well, that's an interesting perspective, and that's probably a realistic perspective. Mr. Munson, rigged money, would you rig into the stock market now or what?
You know, I wouldn't rig it in the stock market. I'll tell you why. Hedge funds right now are making a massive leverage bet that Europe is too big to fail. And if Germany and France can't get these other countries to heed to their rules and go with their sanctions and go with their restrictions, which I don't think they can, I don't think they have enough time, we could have systemic risk to the system. So we could have a foundation that gets shaken, not because it's the 25th time.
So this is a short play you're talking about. This
no,
is
I am
sell.
saying that I think that right now in the days and weeks, you need to stay in U.S. markets, you need to stay clear of anything in Europe, and I think you have to be prepared for a short-term shock. If you see a short-term shock in Europe, because 1 week they can't figure it out, I would use your excess cash and I would buy American stocks.
Patrick, just on that point, I mean, you're the global research director, so you look at the whole world. So let me just ask you, the U.S. economy looks pretty good. It ain't great, but it's certainly not a recession, and we are making money here, profitable business. Is it possible to buy U.S. stocks and leave Europe alone and say they're going to do what they're going to do? I mean, in all seriousness, 25th time or 35th time or 55th, a year from now, we may be having the same conversation about Europe.
I think if we had a big issue on Europe, US would be impacted. And thinking that US is immune, I think is not the right way to approach this. I think it's relatively binary. Either Europe really blows up and it's extremely bloody and everything will collapse, or you think that at some point Germany will ease a bit its position, will agree ECB to monetize step by step, and then this is positive. This is why we're relatively positive on equity at this stage.
You are positive?
Yes.
But so they'll muddle through.
Yeah, but
maybe Italy will have a real budget. I mean, it looks like it. It reads like it.
You know, what is interesting is that also I'm pessimistic on December 9th because the market will not have what it expects. On the other side, step by step, we see Europe coming gradually to some positive measures, and it starts to give confidence to the market, as we have seen.
Go ahead, Lee.
Patrick, U.S. investors, we're not this patient to have a step by step. We have leveraged bets right now.
I'm patient. I'm extremely patient.
Well, you may be patient.
I'm a patient man. I'm a long-term investor. What's wrong with that?
Well, the reason, because I don't think that I think if you're a long-term investor, I think that you have to really not think about what's going to happen.
You know the fable about the hare and the tortoise?
Listen, you'll never see a better turtle than myself. But I also think that, the money is going to flow to the U.S. because as we see less and less confidence in the step-by-step that you're talking about, I think that more money is going to flow into U.S. equities. Right. Why? Because we have certainty.
Would you buy any European equities? I just have about 20 seconds. Would you buy any European equities, Patrick?
I would say yes, for at least for the next few weeks. But long term, I would remain quite cautious on European markets.
All right, thank you. Honest evaluation. Patrick Legland, Lee Munson.